When we do tax planning, we get asked a lot of questions from clients. And one of the ones that we get a lot is, should I buy a car to minimise my tax? And my answer flat out is no, you should not. Cars are a very personal thing. Now, don't get me wrong, there's things like trucks and work utes which are a bit different, but generally, someone wanting to buy a car is because they feel the want or the need to buy a new car. And there's a difference between the two. A want is because you want a newer model, because you may think that it's going to give you better returns, it's going to give you better fuel economy, you're going to look better in it, all these kinds of things. A need is when the vehicle that you've got needs replacing for genuine reasons. Now, those genuine reasons could be that you've got lots of mileage on it and it's getting too long in the tooth and you think it's going to be worthless if you keep it, or it could be a clunker that just is about to die on you. So if you need a vehicle, then by all means go out and do one. But buying one just for the premise of saving tax doesn't work. Up until this year, this financial year, previously, if you bought a new car that was below the ATO luxury car limit, you were able to write off 100% of the cost of it, which was great. It's a tax deduction in that year, but it comes back to bite you on the backside in future years when you sell it, because there's no cost for it, which means you pay tax on the whole sale price down the track. But from this year, the 1st of July 2022, the actual instant asset write-off has been reduced to $22,000, including GST, which means if you're buying a car, be it new or used, if it's over $22,000, we've got to depreciate the whole lot anyway. 15% in year one, 30% in year two going on. So you don't get a massive deduction for buying a car, but what you do have in a lot of cases is a brand new vehicle that isn't worth what you paid for it as soon as you drive out of the showroom.